Good morning, welcome to Morning Outlook. This is Kim speaking on Tuesday the 5th of November. So starting the daily outlook, let's just have a morning outlook. The news first, we've already had the Australian bank rate come out. That was left alone as expected at 0.75. This morning at 9:30 we've got services PMI, and then this afternoon not a lot really. Services PMI for the US, or non-manufacturing, whichever way you want to call it. So services PMI for the US there in the afternoon. So both important numbers. So both rely heavily on services on the service side. So we'll watch those today. Now, aside of that, that's it for today. So the key ones is a bit of New Zealand data at 10:45, employment data. So that's this evening, not this morning. Right, so looking at Eurodollar first, and well, yesterday solid down day there, just ran into those prior highs there, just ran into resistance and rolled. I'm still wondering whether we'll see a continuation of this move towards the daily 200, and well, it's starting to look like it at the moment on the dailies. However, when you come down to the 4 hourlies, well, it becomes more of a potential if it breaks through that 21 moving average. Otherwise, it looks to me like it could continue towards the downside. And when you come down to the 60-minute here, it's sort of almost bear flag. It has got its daily pivot just above us, which yet may be hit. And as I said, for me, if I was looking at this on the long side, I would be looking for the break from that 4 hourly chart. You're not talking many pips, but I'm looking at the sort of break of that 421. If it can start breaking above there, then it starts being a bit more bullish, maybe for a bigger move towards eventually its weekly R1 and that daily 200. So that's the euro. Not really setting yet though. The pound also stumbled yesterday. We're in a funny old situation with it. As you come down the time frames, it's just doesn't really show so well because it's got all that noisy stuff in front. Let's just move that out of the way and look at where we are here. So last week it's confirmed a lower high on the 60 minutes here, 4 hourlies, and it's starting to look a bit sort of more bitty. Again, it depends. If it can get back above that 8 and 21 on the 4 hourlies, back above the weekly pivot, then it becomes more bullish to me. Where it sits at the moment, it's still in a bit of bearish territory, banging it on into its daily pivot at the moment. Now, one thing I would say is it looks like it's almost had a bit of divergence around those lows. Not quite. No, not quite, but principles there, it's almost as low, and it's got a much higher RSI relatively. So where to then? Well, as I say, I would be waiting for this just to break through here, and it could push on more. Now, yesterday's morning's price action was quite slow, and it wasn't really until afternoon that we saw it sort of sell back off here. Well, it was well into the afternoon, and it pushed down towards the end of the day there. From where we sit here at the moment, well, R1's not far away. It's one of the figures I look for each day. So beyond that, well, I mean, you're looking back towards the other highs, but more on probably on over a couple of days. Dollar yen. So continued softening for now at least. It's pushing to walk back towards its daily 200. It did have a pitch through that, and this is just sort of the risk going back on and the money coming out of the yen here. Well, yeah, could push up, continue to push there. There's nothing completely anything beyond the nice trend there. There's nothing really stopping at the moment. So just need a retrace if you was looking to buy that. So you need it for at least on the 60 minutes to come back to the 21, maybe the 34. Has got an untouched daily pivot there, so just need to be aware of that for the day, and that may be even a better place if it pulls back to that to wait for that if it's going to do it, and look on the long side from there. Aussie dollar, I'm just going to go to 60 minute here. So the news was accepted quite well. You see the bigger picture's been pushing up here. It looks like we've got more upside here back towards those prior highs. It seems to stick around there. It choked it off on Friday there. Monday there towards those prior highs there. Last Friday didn't do a lot of good either. But I think it's got the potential to continue pushing there. The more we see of positive statements coming from China and the US on that is a benefit to the Aussie. Canadian dollar, just briefly look again, 60-minute here. You see pretty much the story. It is edging its way down a little bit here. Lower highs, lower lows, a pitch up in between. Overall, if I come back on the dailies on this, and you'll just see how majority of the time it sits in these consolidated periods, which is not great for me anyway. Do a quick look at the New Zealand dollar. We were looking at this yesterday. It ran into its daily 100. Now its monthly pivot still sitting as a target below potentially from where it sits. It was quite a sharp all move off yesterday, cutting right the way through its weekly pivot there. It's reversed at the moment. Maybe some of this is sort of some of it's coming through on potential changes in China, etc., and it's been a supplier, but as it sits here at the moment, it looks like a bear flag to me, and it looks like it could roll some more, but it's certainly done everything it needed to do yesterday. It sold off through its daily to its weekly. We'll look in this in the mornings. One of our traders picked up on it nicely. Nice targets yesterday, daily and weekly, and that's all been done. Where to from here? Well, at the moment, as I say, I think it looks a bit bear flaggy. If it breaks this trend line, then it looks like it could be back down towards the 60-minute 200, maybe even down to its S1 there, the way it's moving at the moment. Okay, that's it. As I said, news-wise, it's PMI figures of the day, services in the morning, and non-manufacturing in the afternoon for the US, 9:30 and 3 o'clock. Have a great day. Bye for now.